Hey, hello guys, this is Jared Rice speaking, and welcome to our weekly preview of what to expect next week in the Forex market. So, as you guys can see, I have my chart out, and we're on the four-hour time frame. And we start by identifying our order flow. As you guys can see, here's our order flow. The market has been giving us higher highs and higher lows, and it has been giving us higher lows ever since it has started from the move on the bottom side on the prices of 1931, and the prices below it was buying up with this type of momentum. So we have seen that our market is now making and going into bullish structures of higher highs and higher lows, and we have seen our order flow is bullish, and where we want to buy our market is at the areas that we have marked as yellow, indicating our yellow demand zones and demand areas. So we can see on the weekly chart that we are at a high level of price on this time frame. Do not disregard what the price is doing on the daily chart. Just hold on. I just wonder what this thing is doing. There are so many things running on my computer right now. So I will need to wait and see what is the catch. What's the catch? What's the catch? Okay, I think now we are fine. As you guys can see on the 4-hour, that's where we are right now. But on a daily, we are at a very key area and a very interesting area for the daily to come break through and take out all these orders that are resting above here, all the stop orders, sell all the stop orders of the buy stops, which is now your selling limits, your buy stops again, your stop losses, and the market is quite going very much bullish. So we have broken this area of supply, right? This was supposed to be area of supply, flipped into area of demand. There's full control over this market, and we are seeing a crazy momentum, a crazy reaction from this area right there. So hence, we are not willing to sell this market off yet. We want to sell the market when we see a break of this low, because we know if we break off this low, we will need to go retest, and then we will have to go down. So that is the analysis that we have on gold, the H4, which is our weekly view of the market. As you guys can see, the new week is going to start after these dotted lines, after this period separators. That's when the new week is going to start. And we also had an interesting thing, right? Let me go zoom in onto the 15-minute. We had an interesting thing on gold. We gave this gold signal in the Telegram group. I'll put the links in the description below so you guys can be able to access the Telegram groups as well. So yes, well, the interesting thing that happened on gold, and as you guys can see, in my time, this is 2000 hours, and by 2015, it has closed, and it just had 4 hours to go to 24 hours as a complete day to end the market. But then, what happened? It was Thanksgiving, and then the market had to take a break 4 hours earlier before the day shut down because of the US, the American holiday, which they so love so much. So this is interesting because we have gave a signal here and bought there, but we see the market. We had targeted these highs, and we just stopped here, but we see the market gapping up and doing all kind of consolidations and whatnot when Sunday, Monday hits. Okay, so what is our overall analysis for gold? We see a gold buy and breaking of those structures. So easy as that, that is our bias. And just because we see that the market is it's turning bullish and we are looking for buying scenarios. We want to buy low. So if we want to buy, we rather buy when the market retraces back to those lows, where if we take our Fibonacci and measure the range, we'll see that they are intertwined and it's a confluence within the lower retracement. If it has to retrace lower, and that's how you should be able to catch your moves. So we want to buy low and sell high, but with this type of analogy and explanation, we are aiming to take out those highs, because on the H4, those highs are quite interesting for us, because now we are clearly in a dominant trend, as we have been breaking all of these structures, these structure highs, these highs, lower highs. We've been breaking this, and we broke this lower high again. So it's clear for us to be moving higher. So let us look at GBP USD. But before we go to GBP USD, we can add Euro USD into the mix, right? We can add Euro USD into the mix. Let me just add this also onto the 15-minute. And you guys can see that I'm using monthly time frames, so I can switch up and see what our overall movement will be like. So we can see that on Euro USD, we also had similar operations and similar structures as on gold. So that we are seeing our overall bullish structure with the Euro USD, similar coloration, positive coloration with gold. They move primarily in the same manner. When one is bullish, the other one also bullish. So on the H4, we have no doubt that this is a bullish trend, because look at this. When we measure this range after it broke structure highs and came to retrace down, it came back into this demand area and tapped the demand area, which coincides with the 79%, right? A deeper retracement. The 79 is just the 81% retracement level. It's nothing new. It's just the default settings with the Fibonacci that it comes with. So we are now going on to the 15-minute to see now how we can structure this trade from the highest of the day to the lowest of the day when it opens tomorrow. Which areas of demand do we see possible entering in? So we would rather come and take these trades, right? This could also happen if you want to risk like 10 pips or 15 pips, you could take that. But after this is broken, you will need to come wait for this structure, for that area of demand to take place, right? So what again do we have on USD is the high over there, or the high of the week. We want to test the high of the week because it really didn't do much, you see. Yes, you can say that it broke this structure, but that structure was just part of liquidity grabbing. So if it broke this structure here, I would have been interested to sell it when it breaks and come and make a retest, and then we can sell again. But for now, we can even say on a daily chart, if it allows me, we can see on the daily chart that this is what the retail traders or trendline traders will be happy about, is this break of this trend line. As you guys can see, this would have been a channel. You see this break of this trend line and then retest here. They are happy to see this market move up, probably to come meet areas of demand around here. So this is quite very much bullish for Euro USD, probably come up there and do its thing, maybe retrace or still go up and then finally meet its target over there. But we are having our bias right now, and the most important thing to have is a bias and entry rules in this market. So we can go along to GBP USD, and you guys can just see that it looks like a sister twin to Euro USD and gold. So same thing that has been showing me with gold and Euro USD is bullish order flow. They have the same bullish order flow, right? So then we can see that the market is really pushing high on this pairs as we're ending the year. And we are going probably in one of the last final weeks of November. So we might see the market really push up higher to go take out other people and liquidate the market of an account, not the market, not liquidate the market, but liquidate the accounts of other people who were selling earlier on. As you guys can see, we can go on the 15-minute of GBP/USD and we can see something interesting right here. We are seeing that we have equal highs and the market has been consolidating as it was ending towards this day. So what is going to happen? This is going to be very interesting as people are both buying and selling. People have a stop loss of buying, people have a stop loss of selling. So there are going to be some people who are going to be annoyed, especially those who are selling. They know what's coming because the market has to at least break up or down when it's starting its weekly move. And the buyers know what it's coming. So it's better to wait for this market to really give you a good new clear structure after taking out both sides. So with this pair, I am not going to trade it until we see both sides taken out and see a clear pattern of the market. So we are going to furthermore look at another pair, and that pair will be USD JPY. So I made a mistake right there. USD JPY. Gonna look at USD JPY on this time frame. We gave out signals on the Telegram group, which I mentioned again. I will send the link of the Telegram group. So we can see, guys, where did we come from? We have been coming from bullish momentum, right? We've been coming from bullish momentum, breaking this structure there, and bullish momentum right here. But what is the overall trend that we can assume here, right? What is the overall trend that we can assume here? Let me just do that. The overall trend will be that the market is starting to become, it was bearish. We just had a short-term retracement to the upside. As you guys can see, the market has been bearish. We have been breaking a whole lot of structures, guys. We've been breaking this structure there, the structure low, the structure low right there, structure low right there, structure low right there, and then this structure low right there, and then another structure low. We have been breaking. So this market has just been falling and falling and falling. It's like a plane crashing, and there's nothing that the market could have done to really save all the buyers that were buying low, that were buying low, that were buying low. This area here had to be liquidated or met for the market to start bouncing up. And as you guys can see, we are in bearish order flow, right? We're in bearish order flow, and it makes sense for me by just counting how many boxes of supplies that we have on the H4 time frame compared to the boxes of yellow that we have on the H4 time frame, right? So we can assume that we can take our range, right? Fibonacci, and we look at prices where it's much more favorable to sell this, right? Since it's going to open next week, we are going to see very key areas whereby the market could be heading to, right? Very key areas, such as this area is very, very strong, but then it's much more likely to maybe pierce up, and then we could see some interesting formation of sellers and interested sellers trying to maybe get in to sell from there and can meet these areas of demand. Guys, we sell from supply to the next demand and we sell from the demands. Then we buy from the demand to the next areas. We buy from the demand to the next areas of supply, or we sell from supply, or we sell from supply to the next areas of demand. Okay, so you must always be flexible enough to switch up your bias. If we sell this market next week, obviously we will have our stop loss above the zone of the blue zone, which we indicated as our supply, and we'll put our stop loss there and meet our take profits just at the zones of the demand. So we can go on the 15-minute and we can see that we have been consolidating in this area as well as the market was heading to a close. We have been consolidating, I think, for a long time, ever since the market closed on the previous day before it entered Friday. And we can see these buyers were taken out. People who are buying here were taken out, and the sellers took their profits, and some sellers got stuck in this rut here. So the market has just been dancing in this consolidation for a long time with USD JPY, which is going to be very much interesting to see which side the market will want to purge or want to take, and which direction will it want to first pull off before it goes into its intended direction. So we can see that happen on a Monday and Tuesday to see the false moves first, and then we can see which the true trading trend that can happen next week. So it is very interesting to see. And if you guys are not on the group, you guys can join the group via the links in the description to see which sides of the market will take, and hopefully we'll follow our rules and we'll make a little bit of money. So thank you for this your time, for taking your time to watch this market analysis and market preview. This is just a guide on how we see the market might happen. Obviously, conditions can change. Obviously, our ideas might change according to what the market is telling us to do. We will adapt and we will be flexible enough to change our ways and to move where the market is moving, and at the end of the day be profitable and have a positive net profitable week. Anyways, do subscribe to the channel and have a good trading week ahead. Peace.